Welcome to Mazuma's Tax Clarity Project, where we take complicated tax issues and give you the gist of them in just a couple minutes. Today we're going to be discussing the question of how to know which entity is best for your small business. There really is no cookie cutter answer for everyone, but it usually boils down to whether you're going to choose an LLC versus an S Corp. Now it's important to remember that this is a state thing. You establish an LLC or an S Corp at the state level, and it's important to remember also that both of these entity choices protect you from personal liability. So this is not really a factor in deciding between the two. What are the main differences that should guide your decision? Remember that both of these entity choices pass income through to the owners. So there's only one level of taxation, and that's on the owner's individual tax return. S Corps are going to have a much more rigid ownership. Only people can own S Corps. LLCs, on the other hand, you can structure things in a much more flexible manner. S Corp regulations generally require you to have a board and bylaws and to have a board meeting at least once a year. In an LLC, there's no required board meeting or bylaws. Under the S Corp, owners must be employees if they're working in the business. This means they're going to receive a W-2 at the end of the year and be withholding taxes throughout the year. LLC owners, on the other hand, can't technically be employees of the LLC and therefore won't receive a W-2 at the end of the year. For this reason, S Corps usually require a payroll service. LLCs may not require a payroll service if there's no one else working in the company besides the owners. One other very important aspect, S Corps are not subject to self-employment tax. The income that's flowing through to the owners generally not subject to self-employment tax. That's not true of an LLC. LLC income and profits to the owners are generally subject to this self-employment tax. So, what do we usually recommend to our clients? Well, we like to get our clients the best of both worlds. You can set up an LLC and then file an election with the IRS to be taxed as an S Corp. This allows you to have flexible ownership of the LLC, the tax savings of the S Corp, and though it will require a payroll service because of the S Corp taxation, it will certainly be worth it since you're avoiding the self-employment tax at the end of the year. How do you go about accomplishing this? Form can be filed after setting up an LLC, Form 2553. It's just a couple pages long. You got to get all the owners to sign it. Don't let anyone charge you for this. It's a very simple form and very standardized procedure for filing it. So, I hope you enjoyed this information from Mazuma's Tax Clarity Project. Give us a call if you have any questions.